Alright, hi everyone. Nice to see you again. This is Brian here from The Boring Husband. Okay, so for today, I think we're going to be looking at NIO. Okay, NIO is currently very cheap on paper. Okay, so if you look at the NIO chart, we're currently trading at like I think 52-week low. So that's back at 2020 levels. Okay, and right now in the US one especially, NIO is trading at probably like about $8, $8.50. Okay, this is a very interesting time for us because NIO is not doing very well. Okay, everything is bad for them. Okay, if I just kind of course look at how they did in Q4. Okay, so I mean the Q4 reporting was quite a while back lah. Okay, but it was really bad. Okay, first of all, they missed on their revenue. Even though the revenues went up, okay, they missed on it. Okay, net losses widened, margins narrowed because of production cost increase, blah blah blah. Overall, very bad. Okay, in terms of Q4 earnings. Okay, and worst of all, okay, if I bring your attention to this chart over here, okay, you can see that our new monthly delivery, okay, the vehicle numbers, okay, so it was doing very well. Like I think this time last year, from what I see here, January 2022, we delivered about a total of 9,600 vehicles. That went up all the way until like December last year, where they delivered over 15,000 vehicles. But this year, okay, in January, okay, they delivered only about 8,500. So it's bad. Okay, but 8,500, but in February, okay, based on the latest information I have here, February it went back up to about 12,000. Okay, so overall not good. Okay, and even though delivery numbers went up in February, okay, this is where we see some kind of divergence, okay, where despite deliveries going up, okay, we still see the price of NIO going down. Okay, now in all honesty, I myself, I am a shareholder of NIO. Okay, I've always been very bullish on NIO, and even at times like this, I question myself whether I'm just like plain stupid or like am I hopeful. Okay, as of now, I still hold shares of NIO. Okay, and with at current prices, okay, at prices of 8, okay, to be honest, I thought they were still trading at 10, but before doing this video, I went to check, and actually, as of yesterday, market close, they closed at about $8.40. So very cheap in terms of what you see here. Okay, but whether the price is truly cheap or not, we cannot determine it, because first of all, NIO is still losing money like nobody's business. They are bleeding a lot of money. So the only way, or rather one of the easiest ways upfront that's easy for us to understand, for us to value them, okay, is through what we call the forward price to sales ratio. Okay, now in terms of forward PS ratio, okay, NIO is trading at about 1.3. Okay, whereas its counterparts, let's say for example like Rivian, or that is trading at about 3.4. You can say that NIO is relatively cheap compared to companies like Rivian, but if you look at like what has even a so-called a better PS, will be legacy companies like Ford, GM. Higher PS will be companies like Tesla. So on its own, to be very honest, even from what I see with DCF models that put the stock at like $8 whatever, there's still no proper way for us to say that NIO is cheap lah. Okay, so the only thing that or rather the most logical thing for us to look at is of course areas where we can buy in. Okay, now for this one, I will move a little bit, okay, into the technical analysis. Okay, so let me just bring it over onto this side. Alright, let's take a look at the charts over here. Okay, so what we see here is the chart of NIO, okay, in the US market, the ADR. Okay, and it's not looking good. Okay, just at the onset, okay, we can see that the green line, okay, is the 200-day moving average, and you can see very closely over here that the 200-day moving average has proven to be a key area of resistance, okay, for the stock. Meaning to say that you see the green line, whenever it touches here, okay, over here, and whenever it touches here, so this was like I think about the 45 level, okay, it bounced down, it went down, and over here at the 2022 level, it hit this 200-day moving average, failed to break above it, and it continues to go down again. Okay, so what this implies is that, to be very honest, the stock has no hope in terms of technicals. Okay, if we really want I mean, if you're not going to go the scalping method, okay, and we're going to really try and find some conviction in terms of hope for this stock, you would wait for the point, okay, where the 200 where it breaks above its 200-day moving average. Okay, that will probably be a point where there could be some hope. Okay, but then again, if you want to look something a little bit closer to home, okay, we'll look at the blue line, which is the 50-day moving average. I'm just going to hide away so this blue line, okay, look over here. Once again, same. Okay, whenever we so-called hit this 50-day moving average, we see that there's some consolidation. Okay, but even over here, but at all times, okay, the stock has failed to rally, past this 50-day moving average. And even so, at today's levels, we did see some consolidation here. Okay, at the 10, at the 10 mark. Okay, but right now, we have still failed to so-called break past this zone over here, lah. Okay, if we look at historical structural support level, so meaning to say that where the stock has previously found its support, okay, unfortunately for this we need to go back 2 years. Okay, I know it might sound a bit ridiculous now, okay, but I put this on the weekly chart now. Okay, now the last time the stock found its resistance turn support, was just at this level, about a very very sweet $10 psychological support, and that was back in all the way in 2019. Okay, if you ask me, unfortunately, I think based on this chart here, our next really key support level would be $6 lah. Okay, about 5 to 6 range. Okay, for me, once again, I love to trade what we call the psychological support levels, and I have further or rather more conviction in these levels when I see prices kind of float between these levels. So areas like 10, 5, hopefully not 1, okay, is areas where I think people like to buy. Okay, and this usually proves to be quite true, because if we see over here, about $5, $6, is where back in it's about back where in 2020 and 2019 the stock trended lah. Okay, so right now, we see this kind of $8.42 level. In all honesty, okay, my personal opinion is that just really based on the technicals, okay, there is more room for the stock to fall lah. Okay, I think $8 is very attractive. Okay, but really just based on my own personal analysis of the chart, okay, there is a little bit more room for this stock to float between about 5 to 6. If you feel happy about it, 7. Okay, but unfortunately, I'm very sorry, there's nothing to suggest a comeback in recent time lah. Okay, alright, but charts aside, okay, overall analysts seem to be very mixed about this stock. Okay, we are seeing this seeking alpha person right on the 7th that NIO is a strong buy at a potential 12.5% discount. Well, kudos to him, but 1 week later, NIO has indeed traded 12.5% less than the time that he wrote it. Okay, we see another person here says that why you cannot count on a comeback for NIO stock. Okay, and he cites how their margins have completely collapsed lah. So overall, very mixed reaction from analysts through and through. Okay, now in my personal opinion, okay, I think that I like the company. Okay, I guess it's more of I guess personal feelings and all that kind of nonsense. Okay, but I do think that NIO has a future. Okay, and this is based on, because first of all, they are introducing new vehicles every year. Okay, so there is indeed a certain degree of innovation in the company, backed of course by their massive increase in R&D costs in Q4. Okay, they are expanding aggressively into new markets. Okay, until today, I'm still very confident that their listing into Singapore is not just a dual listing. I am confident that in time to come, we will eventually see NIO BESS charging stations across Singapore. And all in all, for the most part, NIO has consistently delivered, okay, an excess of 10k vehicles a month. Okay, I think that their track record is indeed there lah. Okay, the headwinds that they face, unfortunately, in recent time, this January period, I think it's consistent throughout everyone, so it's not just them. Okay, and not a lot of people know, okay, but the interesting thing about NIO is that they have this thing called BESS, battery as a service. Battery as a service means that you don't need to charge your EV. You just kind of go to a charging station, swap the battery out in 5 minutes, and off you go, yippee-ki-yay. Okay, BESS is a very interesting concept that NIO is pretty much a double-edged sword. Okay, holds them back, yet brings them forward. But all in all, I think it's an excellent way to ensure recurring revenue for the company. Means after you buy the car, they still charge you for this BESS service, and not only that, it encourages customer loyalty. Okay, overall, At this point, okay, I am still bullish about NIO in the long term. Okay, some may call me a fool. Okay, but having said that, okay, NIO does not take up more than 5% in my portfolio, hence I'm happy to still have a position in it. If you have a position in NIO and it takes up 95% of our portfolio, you should be very scared. Mark my words. Please exercise extreme caution. Don't advise it. Okay, but overall, based on what I see today, okay, the stock is doing a little bit better. Okay, we are seeing deliveries recover. We are not seeing as much bad news as we had. Okay, but once again, the optimism at best, okay, it's probably enough to not make the stock crash to a buck. Okay, but once again, based on technicals, still a bit more room to fall. Myself, I will slowly, patiently DCA into NIO, but at present levels, even at 840, no rash moves here. That's all from me. Thank you for watching.